Here's some common questions we get from our clients and people who call us regarding IRS audits. We thought this would be kind of informative for you. The first one is, do I need to provide bank statements to the IRS? Absolutely. So if IRS is auditing your company or individual and you want to look at the audit letter and determine who the taxpayer is it a company, your company, or is it you individually? And if it's your company and you own 100%, you can also anticipate they're going to open up your personal income tax return for audit, because any adjustments made by especially a flow-through company such as an S-Corp or LLC will automatically be assessed to you personally. Even if you're not 100% owner, they'll take whatever fraction ownership interest and apply that to your individual income tax return and assess you personally as well. So back to the audit. If you don't provide the bank statements, IRS will simply go to your bank, they'll summons it, they don't need a court order, and they'll have it within 30 to 45 days. The benefit of obtaining that information up front is that you can look through all the deposits, and we always perform what we call a bank deposit analysis. This is where we take all the bank accounts for both personal and business and look at all the deposits, add all those in, subtract out any non-taxable income. If you had a transfer from one bank account to another, if you had a loan, you've received loan proceeds, maybe from a line of credit, you borrowed money and put it into your bank account, your operating account, or your personal account, that's not generally considered taxable income, but you're going to have to provide evidence to the IRS. So we always do bank deposit analysis, subtract out any non-taxable deposits. What's left over should be the exact amount you report on your income tax return. And if it's not, you need to have an explanation ready for the IRS, because that's exactly what they're going to come back and assess you for, unless you have an explanation. The second thing that people always ask is, what if I have a net operating loss? Do I have to provide the transactional documents? Yes, you do. We had a client who had a $30 million loss 20 years earlier, right? So this was, I believe, a 2017, a 16, 17, and 18 IRS audit. And they had a $30 million loss that occurred back in the late 90s, early 2000. And they weren't paying any income tax because that loss kept on being carried forward. Now, the law has been changed a little bit, but generally they were able to apply those losses and not pay any income tax. So sure enough, that triggered an IRS audit. And of course, the revenue agent, who's the auditor, asked for source documents. Source documents do not mean your accounting records. They do include your accounting records, but those source documents are going to include bank statements, canceled checks, invoices. It's basically, performing a mini audit on all the years prior to the year that's under examination, because the year under examination reports that loss. It carried over into that year. And even though something that happened years ago, it's still subject to IRS requirements in providing those substantiation records, which is actual source records from third parties, not something that you create on your own. I hope this information is useful. I'm John Milikowsky, founder of Milikowsky Tax Law.